Hello, dividend executives. Welcome back. It is Friday, so you already know we are trading options and we are reviewing our plays from the last 2 weeks and see what the heck happened to the account. Well, as of today, we are up 0.93% or $828 for the week, up 0.19% for the month, up 6,132%. 3 months, 16,247%. And of course, all time, we are up $24,815 or 38.83%, and that is just over a year. We started this account back February 27th is when we transferred in at 63,000, and boom, now we're at 88,000. We are manifesting the wins each and every single week. We had a tough week, actually a tough 2 weeks, I should say, because Tesla went on an absolute ripper. We had a lot to manage. So let's talk about that first, right? Tesla went absolutely crazy over the last couple of weeks. We went down, I think we were down 14,000 on this position at one point. We are now basically break even at down $129. If you look at the past month, Tesla is up $60 a share or 31%. And so we got deep in the money. So I had to manage that yesterday. I didn't want the shares to get called away early. And so we ended up rolling in the money options. So let's jump into it. We made a lot of plays. It's been 2 weeks since we had an update on the account. I was off the grid last week in Lake Powell, so we had to make some adjustments. So we sold some odd lots. You can see Tesla's up 200, and we're only at 200 shares there, and we made a bunch of plays. So first thing first, let's make some plays for today. We have these CleanSpark calls. We're up $266 on the play. CleanSpark is now 0.01 increments to buy to close or sell to open, and so that is time. So we're going to roll this position. We're going to keep it. Let me just look at next week. I'm probably going to do the 17 calls. If we look at CleanSpark as an actual position, we have a cost base of 1636, so I may just actually trade this. Let me just look at it. So I could trade the 16.5. Obviously, we lose the share appreciation there, but we might get back to cash. If we do that, we're going to get a $245 credit. But we lose the share appreciation. If we go in and we do the 17, we give ourselves some share appreciation. We obviously sacrifice the $11 per contract. We get $168, but we buy ourselves potentially $50 a share. So my goal with CleanSpark, as always, is to get back to cash. I like wheeling and dealing the stock. Our cost basis is low enough that we can do that. And so what I'm going to do here is I'm going to go to the July 19th. We're going to sell the 16.5, super aggressive, and I want to see if I can get this done for the 36. It'd be a $252 credit to do so, and I think we can get it. I'm going to leave that open. That would give us $252 for the week, which is a great return on our money, and we have a potential to get rid of them for above our cost basis. So that's the play there. We are up 266 on this week's play, so nice chunk change. And we'll see if we can get a roll there. Next one on the plate is CleanSpark $15 puts. We have 4 of those out. $192 is what we made on this play. These are down to 0.02, so it's time to roll these out. I actually don't mind getting assigned at the 15. So I'm just going to do that again. We're going to get $120 for that. Again, I'm getting paid to try and buy the stocks. So let's see if we can get that to go through. That'd be $124 as a credit. And we'll see if we can get to fill. We're right there between the bid and the ask. As you can see, the bid's at 28, which means I guarantee I'll fill instantly at the 28. The ask is at the 33, and we'll see if we can get a fill there. So it looks like we did just get a fill. So we got the fill on the calls at the 16.5. Again, very aggressive. My full intent is to have the shares called away. I had the same intent last week. Every time when you're willing and dealing a stock, you get out of the mindset of trying to hope to catch the stock when it goes on an absolute ripper and, buy low, sell high. I don't try to do that. I try to manifest the win each and every single week. I sell the calls. I sell the puts. We get paid to buy the stock. We get paid to sell the stock for a profit, and that's what we're trying to do. So CleanSpark calls are rolled out. Tesla calls are rolled out. We'll go over those in a little bit, and then we are trying to roll out these short puts on CleanSpark as well. And then the last one, Amazon. Amazon was absolutely ripping. It has come down. We still are up 71% on the position, or $8,300. So we're looking good there. Amazon a week ago was sitting around that $199 mark. Jeff Bezos, I think, sold like $5 billion worth. So I actually really don't know how much he sold, but he sold a big chunk of shares. The man is living life, and it obviously brought the stock down, but we're not too worried about it. We collected $185 with the premium. We are going to roll this position. We're going to come here to the 19th as we do every single week. We're going to come up here and we're going to sell the 2025 again. I like to collect a little bit of money on this each and every single week. I don't worry too much about the premium. If I can get 30, 40 bucks a week, it's pretty awesome. So that's the Amazon roll there. Hopefully that goes through. That would give us a little bit more cash. We're right between the bid and the ask there at the 46 to 48. So we should be good. It looks like one thing we need to do, it looks like that may not fill on the CleanSpark put roll. CleanSpark has been going up, and so when it goes up, obviously the put premium goes down. So we'll leave that open for now. May have to just let that expire. May have to bring down the strike. We'll see. But so far, so good. We're making money, and things are looking good. And let's go over Tesla, right? So we've had a couple of changes in the week. You can see here my contributions are up to 3,500. My buying power is at 1,775. So we have some buying power available. We put another 250 into the account. And what else did we do? Well, we averaged down a little bit. CleanSpark had some pullbacks. So what did we do? Well, we bought some more shares. And I like to do that every time I can average down a position. I like to do it, especially if I'm willing the stock. So let's look at the Roth IRA here. So we've obviously been rolling the stock. We've been buying the stock. You can see here on July 5th, I bought $153 worth. We did the roll for $266 credit. We bought some more on July 8th for $309. We bought some more on July 11th, which is yesterday, for $842. I think we bought 55 shares here. Yeah, and we bought that at the $15.32. And then we did another short call roll today for the $252. So you can see the short call rolls, they're really paying the premium. We're trying to get back out of the stock, but in the meantime, we're getting paid hundreds of dollars to do so. And then we just keep averaging down. So I keep taking money and I keep buying more, and we just keep staying aggressive with it. Another thing we keep doing is we just keep buying QQQ. This sucker, we love it. We have a dividend coming up of $7.20. We just buy $100 every single week. If we go to the history here, you can see we keep it real simple here, right? $100 on June 21st, $100 on June 14th, $100, $100, $100, $100. That's what we do. $100 every single week. And we do that from our premiums, right? So we're coming here as we do every single week. We're going to buy our $100. We're going to get our 0.2 shares. Don't care about the cost basis. Obviously, we are up on the lot right now. Looking real good, up 13% on QQQ. We're just going to keep buying this every single week. So that's coming up. We're almost at 10 shares here. So we're about a tenth of the way to getting to our 100 shares. So we could trade options on it. The options aren't crazy on this, but if we look at it, we got to like the 22nd, we sell a call. I mean, let's say we sold, I don't know, something around the 0.1 delta, like the 510, $56. So if we can do that, we can get ourselves an extra $50 a week on a long-term hold. That is the goal to get there. It's probably going to take us a couple years to get there, but we just keep adding. So we added to QQQ, and then let's go over Tesla, right? This has been an absolute freaking nightmare of a stock lately. Really good for the account, really bad for the options trade. So let's talk about how I use my odd lots. And let's go here to the Roth. And what did I do, right? So we've been selling calls on this you can see here, we just selling $100, $100, 150, 180, 130, 150, 202. And then right here, we got in the money. You can see the call premium went down. So right here, we had a short call roll. We moved it from the 190 to the 192.5. And then we got in the money. So we went from the 192.5 to the 202. We got the smallest credit we could get. And the stock absolutely skyrocketed after that. We went 2 weeks out from the 628 to the 712. I went on vacation. What happens when I go on vacation? Well, the stock decides to go up $50 a share. So we got absolutely wrecked there, but we got wrecked in a good way, right? Our shares went up in value. Our calls went down in value, but this is a Roth IRA. I've said it before. I'll say it again. I can't use this money for another like 40 or 50 years. So I really don't care about time. So what did I do? I rolled it out and I sold some odd lots. So first things first, we had 14.9 shares of odd lots. I sold all those. I sold them at $264.77. So I sold them at a great price. I raised $3,951 worth of capital. And I did that because I wanted to have the power to roll this strike out for a debit. And so let's jump into that. What does that mean? Well, we rolled it from the 202 212.5 to the 212.5. So we bought ourselves $1,000 per lot in share appreciation. And obviously we have 2 lots, so we bought ourselves $2,000 worth of share appreciation, but it cost me to do that. You can see on this roll here, it cost me to do that $940 per lot, so $1,880 is what it cost me to do that. Now, could I have rolled out 6 months and got a credit for that? 100%. But with Tesla earnings coming up, and with the stock being, I mean, the RSI on the daily was, sitting around like 80 when I did this. There's the Amazon order that just went through. I decided that I just wanted one more week on the stock. I'm hoping or thinking that the stock maybe consolidate a little bit. It's come down a little bit since then, and I'm hoping it continues to come down a little bit more. We shall see. If not, I have more time. I can continue to roll it from there. But I just want to give myself a little bit more time, and I wanted to roll my strike ups, right? So 212 is closer to the cost basis of the 250. We will continue to manage the position, but for now, that's what we did. It cost us $1,880 to do it. We raised $3,900 when we sold the shares, so we had plenty of capital to do it, and that's where we're at with Tesla, right? So Tesla is now at the 212.5. We're up 19.64 cents a trade, which means that the stock has come down. And if we wanted to roll this position again, this is what I'm talking about. So let's say I just wanted to go out to like August 30th, right? $37.58 is how much it's going to cost me to close this position. So if I come here and I try to find one that's between that 36 and 39, you can see if I went to the 36, it's going to be a debit. If I went a little bit further out, I can get that 39, probably closer to this. So I can go to the 225. I'm going to get a $276 credit, and I would move my strike from the 212.5 to the 225, which means I'm capturing more share appreciation, over $2,000 right there. And I'm getting closer and closer to that 250 strike. Again, this isn't the play I'm making now. This is a 63-day change. My play is to play it a little bit closer and just slowly move it up and out, up and out, up and out as Tesla averages out. And hopefully, if it just goes to the moon, then I'm caught deep in the money. But I have some time on my side. I can roll this option out. Obviously, if I really wanted to play the easiest game, then I come in here and I roll this position, let's say like a year, right? So if I get this sucker to like January, because again, I can't use any of this money, then I can get out of the money instantly, right? So I could roll up to the 260 for a $256 credit, and then I move my strike from the 212.5 to the 260, and I have no problems, and I don't touch this position again until January 2025. I could totally do that, and I may totally do that, but for now, this is the way I'm playing it. The account's looking good. I got lots of buying power. I have options when it comes to moving this around, and we're just going to keep making money. So those are the options on the table. That's how I managed rolling this deep in the money option on Tesla. I did not want my shares to get called away under my cost basis and take an L there. So what did I do? I sold some odd lots. I rolled it up and out, and I bought myself some more time. So those are the plays for this week on Tesla and managing that deep in the money option. This is my play on CleanSpark, trying to sell this sucker above my cost basis. Amazon, we just keep wheeling and dealing with that $30 to $50 every single week. And then CleanSpark, if I don't get a fill on this one today, that's okay. I'll wait for Monday and I'll sell for some red Monday or Tuesday, and we'll just see what we got there. So those are the plays for this week. That is the contributions there. Of course, we could jump into the spreadsheet so you can see the numbers. Feel free to stop this or screenshot this or whatever you want to do if you need to look at the nitty gritty of it. But these are the plays we've made. We obviously moved a lot of our income around because we closed this. Obviously, it's an $11,000 loss on that particular, or a $10,000 loss on that particular trade. But because we rolled it, you got the $9,480 on the roll. So we moved a lot of our income from June to July. You'll see that right here. So now we're negative $9,204 on the June, but we're up $10,000 on July, right? Sometimes that's just how options work when I'm accounting it. I obviously have to buy to close the old option that was opened up in June, and I sold the new option in July. So it just moves the income around. I'm not too worried about it there. Again, we already talked about this, but I sold the 14 shares of the odd lot, raised the cash, rolled it up and out, and got myself more share appreciation. So that's where we're at on the account. These are the numbers. CleanSpark continues to be a great one to wheel and deal. Mara's been a great one to wheel and deal. And Tesla, we are just buying ourselves more time and hoping that the stock can average out a little bit. So that's where we're at. That's the update for the account this week. Thank you, everybody, as always, for tuning in. Hopefully this is helpful when we're managing in the money Tesla options. And hopefully there's some knowledge that was shared there. So appreciate everybody. Have a wonderful week and a weekend. And don't forget to drop a like. We'll catch you next time. Happy investing.